Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Well, after a pretty exciting week last week, how are the markets doing in a semi-recovery?
Yeah, last week was a huge shock to the market, really kind of cleansing the market and creating everyone to panic out. And this week, really looking forward the next several weeks, I think we're going to see quite a bit of sideways chatter in the markets. You look at the volatility index, which is also called the fear index. It has spiked up to highs that we saw back in more or less 2015 in August, when the market had a huge crash and very similar volatility. Even again, it happened in 2011. Very similar type of crash and volatility spike. And usually after a move like that, we have seen the markets trade in a very big range, gapping higher, gapping lower the next day, kind of just chopping around. And what it is everyone is in shock. People are starting to debate whether they want to get long, if they want to get short the market, or if they just want to move to cash. And it's going to take, the amount of fear we have in the market, it's going to take probably 2 months for the market to kind of settle and for volatility to start to probably fade back down. And the price during this time will likely trade sideways in a fairly large range.
This is the time when you find out how good your financial advisor is, isn't it?
Yeah, it's tough because the way that the market fell, how it does like more or less a mini kind of flash crash. You really only have a day or two, and then you're too late to really bail out because the markets are oversold, and you might as well wait for a bounce, which is what we're getting in price now. But yeah, it's tough because you can't really prepare for this. We're in a full-fledged bull market still. There's all kinds of warning signs that a bear market is coming, but it's not there yet. Market tops take months and months to unfold, and a crash that happens in a couple days is not something even the best financial advisor can totally protect you on, because it's just not a type of move they're focusing on. So the big question is, what does the financial advisor do with your money come later this year when a topping phase does form and when things are looking like it's about to roll over and we do enter a bear market? Are you watching your account vaporize? Have you moved to cash? Have you taken advantage of profiting from a falling market? So there's, the time will come when the financial advisor will either shine or frustrate you and potentially you could lose a lot of money.
Well, I've heard it's not so much making money, it's holding on to your money when things are bad.
Yeah, well, exactly. It's fairly easy to make money. Bull markets last for multiple years. You kind of set your money in equities and let it ride. But when the warning signs are there, you got to start trimming or move to cash and just be happy sitting, cash rich, and wait for the market's trend to potentially change so you can take advantage of the next big trend, which should be to the downside.
Is there any one area you would put your money in right now to keep it safe?
Everything right now is really choppy, and equities, to me, I think are going to be a wild ride. I still like equities. I still think there's more upside, but I think it's going to be more of a swing traders market, a day traders market, because we've got lots of volume, lots of volatility that caters to very short-term traders. So I still like stocks. I do feel as though they're getting toppy. Precious metals are in a later stage of their bull market, but right now I am mostly just cash rich, and I'm just doing short-term trading because I feel as though the equities market is coming to an end, and I do like precious metals. They look really ripe for a strong rally that could last a few months here. But then after that, I think it's going to be cash or taking advantage of ETFs that rise in value as the stock market falls, because we've seen it in the last bear markets. Gold and gold stocks and silver, they all pretty much crash during a bear market. They do recover first, and they do come out screaming ahead and outperform everything else after bull market. But you got to be aware, they do crash when a bear market comes. They will be forced to liquidate positions, and we saw that with this flash crash. We saw gold stocks sell off very hard during the crash because they are in hedge funds, they are in ETFs, and when things have to rebalance portfolios, it forces selling, and those stocks are in those funds and they get sold down. So it's going to be, again, a trader's market for the next year, 2 years here, and to be focused on short-term swings and bear market strategies.
We'll have more with Chris Vermeulen right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, crude oil, what do you feel is going to happen there?
Yeah, well, crude oil, we talked about this in our last conversation, how it was flirting up there above that $62 per barrel mark, and it needs to hang and close up there. And we did have a monthly close, but shortly after, the market has dropped right back down. We've seen crude oil fall right back down to that below that $62 per barrel range, and it is technically getting oversold here on a short-term basis. It should find support somewhere around the $55, $57 per barrel mark, and if it can stay in that range, it's got a beautiful formation to go much higher going forward. But at this point, it has sold off in a big way. It's reversed from its breakout that it was trying to make last month. And the energy sector stocks, which typically lead crude oil, have sold off in a much bigger way, and they've got a lot of downside potential still to go. So the leading indicators for crude oil are pretty weak, and we've had a reversal on the monthly chart for the price of crude, so it looks like it isn't breaking out to a bull market. So I'm fairly neutral here on crude oil. It should trade between this $50 and $62 per barrel range, I think, for quite some time, which, if it does, will be a very bullish sign. If it breaks below that 55, then we could be going right back into a big sell-off and see the energy sector really sell off in a big way as well.
Do you have any idea why crude kept so much strength through the winter?
I'm not sure. It had a lot of momentum behind it. There was a lot of buying volume, and it was so oversold that I think money was just unwinding and continuously buying into it. The chart pattern was very bullish. There weren't any real fake out moves. It was just kind of rally consolidation, and that typically brings on more and more buyers until it finally hits a breaking point. And I think strictly from a technical standpoint, it hit all of its measured moves based on momentum and volume analysis, and more or less it popped above resistance for about a month there, and now it's rolled right back below it. So to me, it was just a technical move, and the fact that crude oil was so bearish and down for such a long period of time, once it started to rally again, it just naturally kind of gravitated more investors into it and really created that last big leg to the upside.
What's natural gas been doing?
Natural gas has been trading in a beautiful range really since where is this? Back in May, more or less, of 2016. So it's been trading sideways. It's not the greatest looking chart pattern when you look back, but there's some very critical support areas on the continuous contract around the 250 area, 260 level on the chart. And every time it has tagged that, we've seen a huge rally in natural gas. And we just finished having it tag that low back in December. We saw huge run in natural gas from about 260 all the way up to 360, and we ended up playing an inverse ETF to catch this drop back down to this 260 area to try and profit from the falling price. And now we're back at this support zone. It looks like natural gas is oversold. It's at this long-term support again, and it's looking primed here for a very quick bounce once again.
We'll have more with Chris Vermeulen right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. Chatting with Chris Vermeulen. Chris, how are the utilities doing?
Yeah, utility stocks have beat up really hard lately, and we saw this back in 2016, a similar percent-wise pullback. And usually, utility stocks, when investors are extremely bullish, you see utilities kind of underperform because nobody wants to be in these big, boring companies. And utility sector is seen as somewhat as a safe haven play. It's obviously all the utilities you need to for the world to continue to work, and they're not going out of business, and they do pay dividends, but they're not interesting. But during times of fear, and when the market has been when it starts to get shaken up like it has recently last week, we start to see fearful money go to where there's comfort, safe haven, steady gains or profits with companies, and people will move to utilities. And I think utilities are setting up here to probably be actually a top-performing sector over the next 2 months. I think we could see it work its way, maybe even 3 or 4 months, work its way and rally back up and be a leader here in the market as money is looking for some safe haven plays to go. And I think it's a great opportunity for the long side. Palladium,
that space, what's going on there?
Yeah, we talked about Palladium about a month or so ago. It was trading way up just above 1100, and I was talking about how on the monthly chart, if you were to look at the monthly chart of Palladium, it was a major double top from back in 2000 and 2001, and the monthly chart showed that we were going to see at least a 2 or 3 month correction in price. It looked imminent, and so far we've seen that. We've seen from our last conversation it's down about 14.5%. And it's only 2 months to the downside. The last time it hit this level was actually in it was January, February 2001, and then the markets more or less went into a bear market, and we saw Palladium go from 1150 all the way down to about 175. Not saying that's going to happen again, but it has topped at the same price. It has got a major reversal pattern on the monthly chart. We are coming into a bear market. When we enter a bear market, most things drop. And it's kind of a scary-looking chart. It looks like there is potentially a huge potential for Palladium to collapse over the next several months as a bear market slowly unfolds in equities, and it will eventually pull most asset classes lower.
Is there anything else that we should be looking at right now?
To me, the most interesting play is I think natural gas looks great for a play here. I like utilities to get long for a multi-month play. I think equities in general, the indexes, are more or less for short-term swing trades, day traders. I don't see big trends. I see choppy sideways action in the indexes themselves. So we're into that kind of stock pickers / pick a commodity or a sector that is underperforming or outperforming and play the trend that it is in, because I think the overall indexes are going to be pretty choppy here for a couple months, and there's better opportunities focusing on some niche markets within the market.
Are you doing cryptocurrencies?
You know, I do follow Bitcoin, and I don't see an imminent setup. Last week we had a bottom set for Tuesday, Wednesday in the Bitcoin. It's had a nice bounce up to that level. We've got a cycle topping out in about 2 or 3 days here, and it looks like it has lost its upward momentum. It had a strong volume bounce, and now it's fading away with volume, so there's not a lot of support. I do follow it, use cycle analysis on it because it seems to play out very well. But at this point, I think we're going to be a couple weeks out with Bitcoin trying to digest this bottom and this recent bounce before it could potentially start to move higher again.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. Any questions for the show or our guests can be sent to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.